There you go. Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I am recording with Sivan Iram, founder and CEO at Capitola. Sivan, thank you for joining me today. How's it going?
Thanks for having me. It's going great.
Awesome. And I should have said this before we start recording, but we are recording on Riverside, which means that if the internet's crappy on either side, probably on mine because I'm in Argentina right now, you might lose my image, but it'll get recorded at full quality. Okay. And then it'll get joined on the back end. Cool. So that's why I record on Riverside. Okay. So according to LinkedIn, it looks like you are in Mountain View, California, right in the heart of Silicon Valley. I used to live in Berkeley, so I actually know the area very well. So Silicon Valley, middle of June, we're recording on June 14th, 2023. June, Silicon Valley, probably very nice weather. A little bit chilly, but nice.
Beautiful weather. We have a few team members visiting us. We have a few remote folks. Most of the companies here in Mountain View. So happens that this week people have flown in and they're in the office, and we went to a team lunch 2 hours ago, and it was beautiful weather on Castro Street. Sunny, people are out. It's really refreshing. First of all, to have everybody in the same place, but then just fantastic weather right now here.
Beautiful, 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 beautiful. Fantastic. Wildfires nearby?
Well, I was in New York last week where the wildfires, and that was for IPI, and that was surreal environment. We had an orange day here in San Francisco a few years back. This time in New York, you can actually feel the pollution. So nothing here. I think this early summer is still okay, but New York.
I was at ITI last week. Did we chat at ITI? I would have been the guy with the top hat that was wearing a red jacket and doing magic for people.
No, I don't think we did, but
Okay.
I should have. I would love to see that magic trick.
Perfect. Great conference. Next, and you know what? ITC. Look me up at
Next.
ITC, and not only that, but you'll have a chance to win a prize if you can guess how I did one of the tricks, or by donating to Ensure Equality. Anyway, awesome. So we always give the guest the chance to give the elevator pitch. What is Capitola?
So Capitola is a digital marketplace for middle market commercial risk. What we're trying to do is really better connect brokers and underwriters around the entire placement process for middle market risk, right? So any coverage line, basically, when brokers are trying to start the renewal process, or if they have new business, they come to Capitola. We have all their documents, working with the back-end systems to have all their documents ready to really easily select the markets they want to contact. The entire back and forth, comparing quotes, creating customer materials, the whole thing we streamline, we make super efficient. And in addition to that, we have an AI-driven market intelligence recommendation to tell them what capacity providers, what markets they should go to for any type of risk. So really, Capitola is a placement platform connecting brokers and carriers. It's all about efficiency. One side is efficiency of the process, and the other is efficiency of the distribution network, surfacing recommendations for which capacity providers to select for every risk.
Okay, so efficiency of the process and efficiency of the, I missed that part. Like I couldn't type fast enough.
Efficiency of the distribution network. So
Of the distribution network.
when I can tell the story of how Capitola came to life.
So
When
before you do that, this one's really close to my heart. I'm a former middle market underwriter, Liberty. I'm a CBCU, and I underwrote first for Nationwide in small commercial, a farm, and then Liberty middle market. Okay, we're having a little lag. So I saw you move your mouth, but I couldn't hear you. So let's wait for you to get back.
No, I'm here.
Okay, perfect. Okay, so yeah, I'm former middle market for Liberty. Back in 2000 and probably 16 and 17. Sounds like, yeah, 16 and 17. I was in the Duluth, Georgia office, and I had the territory of Mississippi, which is the crappiest territory in the country, but I still learned a lot about middle market. and then I wrote my book about how to engage millennials in insurance, and ended up leaving the carrier space. So I know that world. And back in my day, right? I feel like I did my cane. But back in my day, like we were sending scanned PDFs back and forth with like 200-page accords, and then Becky, my UA, would send another 6 supplementals, right? And Becky and my UA and the processing team would spend hours and hours and hours entering stuff into the system. That here's the stupid thing, right? I'm working only with middle and larger brokers. Yeah. They have Epic and Verta. They have Verta4 or Epic. They have the information digitally.
Yeah.
And they're like, somehow that information is not getting transferred digitally. It's a PDF. And we're wasting our time entering in the system. Anyway, it was a disaster. So with Capitola,
exactly right.
So let's talk about the origin story. Yeah, how did you come up with this?
So when you look at the small commercial space, you see lots of automation, you see lots of disintermediation. Actually, you see all these different platforms come in, especially where you can find algorithmic underwriting, the ability to do kind of like a comparative rating, and there's really kind of a there's so the proliferation of these platforms out there. But when you look at middle market, where you almost by design have humans in the loop, you have the broker that represents the insured, you have the underwriter that needs to look at the risk. Larger companies, more complex risk, need tailored solutions. There's almost zero entrepreneurial attention. The tools that these two sides are using, and you said it, they were set up distinct almost by design, set up in the 90s, before cloud, before really the ability to connect via API. The software that this industry segment uses is really traditional, let's call it. And so what we do is we come in between those systems, the agency management system on one side and the underwriter workbench on the other, and we really streamline the process between two humans. I started my career as a software engineer. Very early, I kind of got inspired by what happens when you take advanced technology and you marry that with human capabilities to drive business outcomes. And I transitioned from being a software engineer to being kind of more on the business side. I got my MBA here in the States. In the past decade, more than a decade, I've worked with various tech companies.
Harvard, right?
I went to Harvard. The business school was just phenomenal experience. And in more than a decade, I've spent now with various tech companies focusing on digital transformation and bringing innovation to traditional industry. And I've done a lot of work I've done work with supply chain, manufacturing companies, automotive, energy. So really on one side, you got this technological challenge of integrating into legacy systems, but also the human challenge of change management. How do we build technology that people actually want to use beyond the C-suite decision? And that kind of inspired me to start Capitola. And when I learned about the insurance space, middle market specifically, it felt like there's really an opportunity to come in and bring efficiency to this segment. And again, efficiency means process automation, streamlining many of the tasks, removing overhead and repetitive manual things that people do, but then also efficiency of the distribution network. How do we better connect buyers and sellers around risk appetite? What we recognized is that risk appetite from carriers, generally capacity providers, MGAs, reinsurers, is communicated in a very analog way. It happens in conferences, it happens in meetings, sometimes it happens at the bar or on the golf course. But at the moment of submission, which is a key moment where the brokers decide to go to markets, they basically rely on their expertise, their relationships, which are phenomenal assets. That's what brokers hang their head on. But what we come with is kind of a data-driven approach to complementing relationships, complementing expertise, and making smart market recommendations. So we work with the carriers to understand the risk appetite. We also look at the actual placements themselves, and we look for indication of risk appetite. And we build this recommendation model that is being interleaved into the placement process. So at the moment, after document selection, after you get familiarized with the risk, when the broker wants to go to markets, we then insert our smart market recommendation. They can still go to their own markets. They can still go to anybody that they know and have a relationship with. But we try to complement, and we try to make the process smarter by making our own recommendations.
Okay, all of that is making tons of sense to me. Question.
Yep.
In the mid and long term, in middle market, is the broker going away?
Absolutely not.
How confident are you? What's your confidence interval on that answer?
You know, lots of companies, especially technology companies, come in with that thesis of the broker is irrelevant and you want to disintermediate. I think if you start with what is the role of the broker, first of all, it really focuses you on where the value is and where they need to spend their time. And then the opportunity for technology tools like us to come in and remove everything else, everything that kind of takes them away from what it means to be a broker. And at the end of the day, there's two things the broker do. They give expert advice for the insureds. They represent them, especially in middle market where you don't have risk managers, most likely within the company. In many cases, you really rely on the broker to bring their expertise. They see so many deals, they talk to so many carriers. They know the lay of the land. That's their strength, and that's what they bring. So number one, expertise. Number two is market access, right? So those relationships and the ability to move the needle and to get things done. So that's really what we see brokers do today, the best ones, where they focus. But I think the tools that they've been given take them away from that. When we measure, we've benchmarked. Go ahead.
Assuming that it hasn't changed too much from 2016, 2017, 2018, yeah, the tools were only slightly better than like Chisel and right.
Chisel,
no,
yeah.
No, not quite. They were systems from the 90s, but I was at a really good, really large carrier that I really invested in it. I know plenty of underwriters that, holy crap, they're underwriting on the back of a napkin almost. But yeah, even at a good carrier, the systems were not great. So that really hampers, that really gets in the way of, and so much time is wasted on like re-entering that. And it wasn't my time; I was too expensive.
Yeah.
But
That's
Becky's
exactly
time
right.
and the processing team time, so much time is wasted. So I agree with you completely. Yeah, the broker. I agree. Expert advice, understanding your type of business, hopefully, and market access, which is hard, especially right now during a hard market. So what about the underwriter? Is the underwriter getting automated away in middle market, long term?
So
long term.
The challenge for underwriters really is that when there isn't strong relationships, or when you don't have lots of expertise on the broker side, many cases, you see really kind of canvassing the market, shotgunning the market. Now, granted, sometimes it's to block, but many cases it's to actually tease out risk appetite. Without the knowledge of where to go, sometimes you go really broadly. And what that does...
That's true, that's true, yeah.
Really, on the underwriter side, you see this huge, ever-growing pile of submissions coming in. So that underwriters really look at, they're struggling to triage. And the systems that underwriters have really kind of, I think, are getting better at helping them to triage. But every time you talk to an underwriter, they say, especially in a hard market, by the way, they say, I have too many submissions to get to. So I kind of rely on my relationships to put them at the top of the pile, so I know they're giving me good business. What we're trying to do really for carriers, the pitch is really simple. Partner with us, tell us what your risk appetite is, and we will be the best source of highly curated deal flow. Look at Capitola as a distribution partner. Tell us what you like, what kind of risk you do want to write, what risk you don't want to write. And we'll make sure that we make those recommendations. We'll inform brokers so they can really direct the right kind of risk to you that you like, and try to avoid sending those. We never prevent brokers from sending things anywhere if they have a relationship. And sometimes, the explicit risk appetite is one thing, but then you have the ability to work with your partners. That's kind of the the portion of what it means to be a human, what it means to build relationships, and is never going to go away. We will never prevent a broker from sending anything anywhere. It's more about giving people insight and telling them, based on the explicit underwriting guideline that we have, here are the markets that we believe can really respond positively to this and give you what you want. And for the underwriters, what we're trying to do is give them more at bats at the kind of pitches that they want to swing at, and kind of increase their hit ratio, because that's what they're being measured on.
So from the beginning, when you started telling me about this, the first thing that came to mind, and you might be emailing me tomorrow morning at 4 a.m. Telling me to cut this piece out, but the first piece that came to mind is Capitola is the bold penguin for middle markets. Is that correct? Is that not correct? Is that too simplistic?
We try not to define ourselves by others. It really is more about, we see ourselves as unique in the fact that we understand, we realize how important the humans are on both ends, the underwriter and the broker, and we put our focus to better connect them. Our motto is broker better, because we believe that brokers that are an irreplaceable part, underwriters are as well, and so they need better tools to work and transact better.
Absolutely. 100%. Okay. Here's another kind of facetious question. So, my friend Abel Travis said many times, for those that don't know him, he used to run a podcast called Insurance Innovators Unleashed, and then he became the head of innovation for AF Group of Michigan, and he's now at Brethren Mutual. So anyway, many times he has said publicly that the insurtechs that will be successful are the ones where the word insurtech has half insurance, half tech, that the ones that comply with that, the ones where in the leadership you have real insurance people with real power, real tech people with real power, and throughout the organization, it's not a matter of numbers. It's not a matter of whether you have more insurance people than developers or more developers than than insurance people. It's whether those two sides are balanced. And I coined that into the Abel Travis rule. So Abel said it, I named it the Abel Travis rule. So does Capitola comply with the Abel Travis rule? Do you have real insurance people in there, in the leadership?
Real insurance people. And first of all, it's important to say that many times when people say the word insurtechs, they refer to companies who hold the pen. Usually it's an MGA model, and then you bring in technology that is able to help you assess risk better. That's the Hippos, the Lemonades, the AtBays, the Corvuses of the world, Coalition, and so on. We don't hold the pen. We don't take risk. Obviously MGAs don't, but in the sense of integrating underwriting into it, we see ourselves much more as an efficiency and distribution play.
You're a tool, a marketplace.
More of a marketplace, and if we had to be defined, it would be under the category of broker tech, much more than the MGA side. So that's important to say, and totally, we brought not only in people that we hired, really strong, experienced insurance experts, but from the get-go, from the very first day, even in our investor group, we made sure to have prominent decision makers, luminaries, people who are central to the industry, to advise us, to help us to help the leadership team build the right strategy, the product team build the right product, our sales team to connect the right folks, and I see that really as a core part of our DNA.
Perfect. What's the revenue model? What's the pricing model?
So the technology itself is being licensed to brokers who work with us. It's a SaaS model. So right now we're licensing seat-based, meaning per user. What we've done is we've created a benchmark that shows that we save broker teams 47% time on task, allowing them to produce 30% more with the same size team. Especially when you think about the challenge in talent, that's a huge focus. Operational margin, huge focus. So the value translates to $30,000 for every user that uses Capitola, and we take a 90% discount and basically charge close to $3,000 per user per year. What we also do, and this is important, is a part of the vision of bringing efficiency to the distribution network is to make recommendations for brokers on where to find capacity. And we do this from within their appointed carriers, everybody they already work with. But we also go out and get appointments ourselves with carriers. And if there's no connection there, we present that capacity with us as the wholesaler. So we hold a producer and surplus license in the US. We already have kind of a growing number of carriers providing us with capacity. We're able to matchmake. And really, this is important. The vision is to put the best capacity at the fingertips of every broker, regardless of existing appointments. If there's already an appointment, we never get in between. But you can almost think of it as wholesale as a service. Our ability to connect them with additional capacity, again, that matches this risk based on a risk appetite model.
Loving it.
And I will say, if I might, and because you asked about the model, when that happens, when we are introducing our brokers to new capacity, and they choose to go with it, the model there is standard. We have a commission agreement with our carriers, but we're actually able to compensate our brokers greater than they would if they would go traditional routes. So that's an important point to make, that not only that they get to keep their access to unique capacity that is really valuable, but also they get compensated more based on the model. So the whole point is to make the broker indifferent from a commission standpoint and a compensation standpoint, make them indifferent whether they go direct or not. It's more about finding the right coverage, finding the right capacity partner for each risk.
Perfect. Normally, I ask about integration and about results for the clients. You've already talked about results for the clients. Tell me about the integration piece, both with the brokers and with the carriers. How do we plug into your system?
Absolutely. So we have the ability to plug into the most common agency management system. I'm starting with the broker side. Whether it's Verda4 or Epic, there's a new generation of agency management systems that are more that also API forward. We integrate into those. Typically, when we get started, we don't require an integration. We can work with businesses to make sure that those systems are connected. The best way to think of Capitola is like a placement management system. We're not replacing the agency management system. We're connecting into it. We're taking information out, the renewal book, all the supporting documents. We support the entire placement process, start to finish, quote, bind, issue, and then we feed information back into the agency management systems. One of the things that are most manual and burdensome to brokers is the need to keep dragging and dropping things into systems that they don't necessarily use on a daily basis, but the company wants them to do. We completely remove that requirement. We do the integration and we feed back everything with the right labels, with the right naming convention, and we save them so much time that they can focus on what they do best, right? Serving their clients and building relationships with carriers. So that's how it looks like on the broker side. With carriers, it's very different. We don't have a carrier login. We're not asking the underwriters to come to us. The design principle is meet you where you are. So in many cases, we're sending underwriters emails from our platform. And in other cases where carriers are asking us, we integrate into existing workbenches. So submissions can appear, can be organized in the existing tools that they use.
How do you figure out appetites? Are you white labeling Ask Kodiak or one of those?
So there's three sources of information we use for our risk appetite model. First, we work with carriers to get their explicit underwriting guidelines. They are happy and excited by it because it means they get better curated deal flow. So that's number one. That is the only data source that I'll mention that is shared across all of our accounts. Everything else is Chinese wall. We make sure that everything else we don't share between our accounts. So the second data source that we take is there's every broker has an internal knowledge of risk appetite. Typically, it appears either in an Excel sheet or there's like a carrier database system where they keep the risk appetite comments. We take that and we feed that into the algorithm. And the third source of data is the transactional data that actually happens from placements. And what we're doing is we're looking for positive and negative indications for risk appetite. And I'll give you two quick examples, one for a positive one and then one for a negative one. So on the positive side, every time an underwriter quotes, and even more so when the broker asks to bind, that's a really positive indication for risk appetite. And we take that and we remember it, we feed that into the system. So the next time that a similar risk would come in, we can make a recommendation. A negative example would be when an underwriter declines and very explicitly says that they decline due to a risk appetite reason. And it can be an industry code, or it could be something we had a few days ago where an underwriter responded and said, we don't underwrite any real estate property prior to 1946. So we take that comment and we feed that back in, so the next time something like that appears, we can make the recommendation. I'll say that we recently, 2 days ago, we announced our use of GPT technology in our platform. We're able to look at documents and extract information. We're able to look at emails and classify and categorize responses, whether something is a declination or it's a quote or it's a subjectivity or there's more information requested, and we're able to tee everything up for the broker so they can take the next kind of best step in the direction of serving the customer.
Perfect. Awesome. Very, very exciting. I like everything I'm hearing. Very, very, very exciting. Are there, this is kind of the last question, are there any features that are coming down the roadmap that you can already talk about, that you'd like to mention?
Yeah, much of it is really around kind of this introduction of GPT models. I think there's three core use cases that are going to be supercharged by this technology. It's important to remember that even though lots of companies and industries use AI and GPT as a buzzword, for us it's a true tectonic shift in the way that we can build tools that serve insurance professionals. So those three categories. One is data extraction. With previous technologies, we had to train a model. We had to use OCR, or really kind of archaic technologies that had very little, very low reliability and confidence level. With GPT technology, even when you use unstructured formats, documents, emails, you can extract information and synthesize and drive insights. So data extraction is one. I'll say the big difference with GPT is that in previous technologies, this is in regards to data extraction, it was really a syntax extraction. So you were looking for a certain phrase or a word, and if you couldn't find it, you kind of, it was a failed effort. With GPT technology, the extraction is semantic. So you can really, the model infers and understand things that sometimes are not even written specifically, and really is jaw-dropping to see the level of intelligence when it comes to extracting information. The second category is data enrichment, the ability to add more information from publicly available sources, especially when you think about public companies, but not only, is without the necessarily going out and implementing API integration into various platforms. So just even from the open web, it really is incredible. And the last one is supercharging market intelligence and recommendations. The ability, at the core of this technology of large language models is the ability to look at large data sets, synthesize them, and drive insights. So the ability to do that much quicker and much more intelligently, I think is coming around the bend.
Fantastic. Sivan, thank you so much for your time today. This was super, super interesting. I love what you guys are doing.
Thank you.
And yeah, very, very exciting to see this happening, and looking forward to have you back on the show in a year or two to talk about how this has actually been deployed in more and more carriers. Looking forward to see you at ITC, which I'm sure you guys will be at. Yeah, so I'm a little bit tempted to go down a rabbit hole on whether you think that we are at the elbow of the exponential curve for AI, and whether who's going to win, whether humanity will still exist in 10 years, or whether we'll be in the matrix or just non-existent. But we are out of time, and I am getting hungry for dinner, but maybe I'll hunt you down on ITC and we'll have the conversation maybe with some more people, because this should be a really fun one. Thank you so much for your time. For the listeners, on the show notes, I'll have Sivan tagged and the company tagged. This is really interesting stuff. If you are at a broker that does middle market, and if you are at a broker that does middle market, and this is not exciting to you, you are just not paying attention. And if you are at a carrier that does middle market, and go show this episode to 3 or 4 of your best young underwriters, and see how excited they get. I think that's the best thing I can say. So anyway, thank you so much for your time. Looking forward to continue the conversation.
Thank you, Tony. Same here. Thanks for having me.